Thank you, Raleigh. Presenting on the office market, Chris Kirk, Managing Director, Office Specialist with Colliers International. Chris has been active in the industry for over 20 years, completing over $750 million in transactions.
Good morning. We're off to a great start, and I just want to take a quick moment also to thank you, the NAIOP board and the committee. Lindsay Cleverly's tireless and patience helping us prepare for this truly raises the bar of the symposium every year. I want to thank my team for allowing me to take the time off to present, and also the outstanding professionals at Colliers in the graphics, research, and data departments that have helped me prepare the article as well as this presentation. Let me see. So with that in mind, I snapped this image atop Mount Raymond a couple of weeks ago, and while I was in the midst of many hours in the backcountry, I thought that I was likely procrastinating preparing for this presentation. But the reality is I draw a lot of parallels between mountaineering and my career in commercial real estate. When I prepare for an adventure, I examine the data, plan a route for success, but then during the day you realize there's environmental issues that happen, there's things around you that you have to constantly assess in order to redirect or make decisions based on your experience to hopefully get to the top safely, but most importantly, to get home. With that in mind, we'll dive into the Utah County office market, the Utah office market report. So let's go. Salt Lake County office market indicators were all positive. Net positive absorption more than doubled to 1.4 million square feet. Vacancy dipped to the single digits. Asking overall lease rates rose to $24.48 a square foot full service. And the office market grew by almost 600,000 square feet last year, with 1.2 million square feet under construction, and most of that is slated for delivery mid-year 2019. Here's a graph, a chart showing the last 5 years of lease rates. Again, the trajectory is going the right direction. We ended up this year with overall lease rates at $24.50. And when you look into the data in the magazine, you'll notice that the Class A rate actually slightly dipped, and that is a result of the highest tier, most quality office space being mostly occupied. And it's the lower tier Class A office that is available, skewing that number. Overall vacancy also on the right trajectory over the last 5 years. I mentioned single digits. We're at 9.04% vacancy. It's often been told to me over my career that healthy vacancy hovers right around 12%. So this is quite telling for the robust nature of our office market. Here's a graph that shows construction and absorption. Construction is in the vertical columns, and absorption is the yellow line. For the first time this year, you can see in 2018, net positive absorption outpaced new construction. I think that's also very telling for our developers who are out there building new buildings. Here's a pie chart showing the new construction, almost 1.2 million square feet that I mentioned, 42% of that is pre-leased. Notable, 28% of that is in the Draper market, and the emergence of Sugar House this year is interesting. 27% of that number is in the Sugar House market. Almost too many projects to talk about, but I've showcased a couple here that I find interesting. 136 Center, built spec by Boyer, shored up its occupancy with a large deal with Dealer Track, 112,000 square feet. Sojo Station leased up its phase 1 this year. And then prior to getting a shovel in the ground, landed a full building deal with Avanti at 160,000 square feet. That project now is 100% full. Pluralsight announced its relocation of its headquarters, 350,000 square feet, choosing Draper at Highline Station for its headquarters operation. I think 2018 could be summed up as a transit-oriented development year. And this continues a trend. We've seen success of U-72 and now into these great projects like Sojo Station, Vista Station, Highline Station. These have a transit-oriented component to it. And I think we'll continue to see tenants demand wanting to be in buildings that have good access to public transportation. Let's talk about Utah County quickly. Absorption, also positive, 833,000 square feet of positive net absorption. Vacancy dipping into the single digits as well. Asking lease rates, we're nearing, overall asking lease rates nearing $22 a square foot. And look at this number here, 1.8 million square feet of office space is under construction in Utah County. Looking at the pie chart, you can see that 92% of that is in the northernmost sector of Utah County. And you can also see here a 7-year trend of vacancy rates dipping down again to that single-digit number at 9.29%. So that's a lot of talk about construction. Let's showcase a couple of those properties in Utah County. Innovation Point, expansion of the Young Living essential oils. doTERRA, great examples of companies and buildings expanding in Utah County. Pleasant Grove is in the mix. Silicon Slopes, boundaries pushed to the south. Grove Tower, Valley Grove are great examples of buildings in that submarket. Again, Utah construction is a big story. Let's talk about Silicon Slopes briefly. As mentioned, the southern border pushing south into Pleasant Grove. On the north side, we're seeing the tech sector in Sandy. So this map kind of shows that Silicon Slopes geographic location currently. And with that in mind, Colliers International has taken the incentive to track stats in this submarket. So exclusive look today at Point of the Mountain Market Report. Out of all the construction that I've talked about, in this sector you have over 2.2 million square feet under construction. And in the absorptions, and 74% of that, by the way, is in that northern Utah County sector. And then absorption, 1.5 million square feet has been absorbed in that Point of the Mountain area. So let's talk about surfing. What I want to talk about is what you do with other assets, older assets, and how you reposition those. And like this surfer, it takes an awareness of your surrounding forces that are larger than you. You can't fake this. You have to put yourself in position for success. If you make this drop, this guy looks clearly like he's going to make his drop. He's got a great ride and glory. If he misses that mark, he's in a dark room of despair and gnarliness. So we had projects this year that really hit the mark and are going to do great, and we had some projects that, carpet and paint, calling themselves awesome, just isn't going to quite lease them up. So with that in mind, we had an off-market sale on One Sandy Center. This California buyer, Peregrine Realty Partners, came in with a great plan to reposition this asset. Many of us know this building Hoops Vision Clinic was in. They moved to build a new building years ago, and the building has kind of struggled with some vacancy. So these guys came in, they established a team, put together a plan, committed to a lobby renovation plan, did some exterior upgrades, built out a spec suite, and in that, shored up existing tenant obligations, and within 12 months, this asset is 100% leased. And lease rate growth is almost 20%, asking $24.50 in the last vacancy. Thanksgiving Park. Many of us know this building is one of the first buildings built in the Lehigh area in early 2000. And now, amidst a backdrop of contemporary design and architecture, Stack Development knows that they need to do something, and they are reskinning this project, cleaning up the lines of the architecture and really making this fit in being well positioned in its location amidst a robust Lehigh submarket. Moving downtown, Neuron has shored up its asset at 257 Tower, committing to lobby and common area upgrades, gyms, personal lockers, and so forth. Common area on the ground floor is indoor-outdoor space where tenants can have presentations and meetings and food and so forth. This has allowed them to do some solid leasing, shoring up 33,000 square feet of existing tenant leases, and they've leased one of their ground floor spaces. Note across the street from that building, 250 Tower, formerly known as CenturyLink, has a handsome lobby redesign. And if you go to Main Street on Kearns, Hines is redeveloping that project, and the top 2 floors of that building are very cool and worth a visit. So let's talk about market trends. We had a strong and continued emergence of co-working. WeWork, Kiln, Industrious came into this market, among others, in a big way. WeWork, I guess now the We Company, inked a deal of over 60,000 feet in the Lehigh submarket and is looking in multiple locations downtown. Workplace design is trending still to efficiency and open space. However, some studies are showing that in that open bench seating area, it's actually leading to some employee isolationism. So I think we'll see some changes in the workplace design. Increasing cost of tenant improvements exerts upward pressure on lease rates. I think we all see cost of construction going up, and an urbanization of our market is transitioning tenant attention to downtown. We certainly see this globally in the tech sector as tech companies around the world really are looking in urbanized areas to expand their presence and tap into that live-work environment that Raleigh was just talking about. And our big employers, either here or outside, are looking to attract outside labor. Those of us that live here, born here like myself, know that this is an outstanding place to live. So let's talk a little bit about that emergence of the Sugar House submarket. These buildings, 80 Park being fully leased by the University of Utah, and 60 Park, 150,000 square foot Class A office building, well located centrally in the valley, great access to the freeways, but it's located in a vibrant, hip, and diverse neighborhood of Sugar House. And I think that idea of living in Sugar House is now very, very appealing to people, and good timing with these office buildings. Another interesting thing about these buildings is they're setting the high water mark now for lease rates in the suburban submarket, asking $38 a square foot. Typically and historically, we've seen the Cottonwood Corporate Center area having the highest suburban office lease rates. So I think this is pretty significant. Let's talk a little bit about downtown. If we look at our skyline over the last 50 years, we have had a pattern of bringing a new office tower over 20 stories, bringing a new one on about every 10 years. City Creek Reserve, real estate arm of the LDS Church, announced this year that they're breaking that cycle, and it'll be 5 years between Class A office buildings. 95 South State at City Creek is going vertical this year, slated to be delivered in the second or third quarter of 2021. We'll bring approximately 500,000 square feet of Class A office space. This will be a LEED Gold building. It'll be a well building, which means that it's a focus on the experience of the tenants, both in the common areas and in the lease space. They're going to be a wired building, which means seamless technology throughout, allowing tenants to experience seamless connectivity throughout the building and the elevators. And then this will be connected to City Creek with a retail-lined tunnel, which is pretty neat. Along that line, just south of there, 151 Tower is slated for construction this year. These two buildings were going vertical on State Street. This really establishes State Street as an established business address, and the urban core energy traditionally located around South Temple and Main Street pushes its boundaries east. Colleague Andy is going to talk about the success of the Gateway. By summer of 2019, Gateway feels different when you walk through it with all of the leasing that's been going on with office and retail tenants. Just to the south of that, Innovation District is an area of the Granary where developers are looking to develop bricks and mortar, funky, cool type of office space that will provide an alternative to the traditional office space downtown. And just to the east of that, Patronelli looks to go vertical with 600,000 square feet of office buildings, mid-rise, which I think will be a great opportunity for some of our tech tenants looking in more urban areas. Andy will talk about the 9 line, and also Bryce, who touched on very well opportunity zones. If you overlay an opportunity and RDA map downtown, you can see developers and tenants will look to downtown to take advantage of these benefits of opportunity zones and RDA projects. So looking forward into the market forecast to 2019, based on everything that we are seeing in this market, I continue to see a trend of continued positive absorption. I think we'll continue to see upward pressure on lease rates. Ongoing new construction will continue to certainly occur, and vacancy will remain healthy. So we all recognize living here, this is a world-class place to live. It's business-friendly, and work-life balance is important. It's certainly attractive to investors, as we've heard, and we recognize we've got some challenges, and we can work together to solve problems regarding air quality, labor shortage. Those of us that choose to dive into this will understand this and be able to better articulate what's going on with the labor market to our clients. And affordable housing, as Raleigh talked about, among others, are challenges that I look forward to working, collaborating with you, going forward into 2019 and beyond. Thank you very much.